Welcome to the Payments Podcast. I'm your host, Bottom Line Managing Editor, Owen McDonald. A brave new world of digital business payments is leaning into concepts like hyperconnectivity, hyper-personalization, AI readiness, and the expansion of SaaS. Together, they're unlocking new opportunities and providing agility and scalability. It's all part of the modernization wave that continues sweeping across banking and B2B payments. To bring these concepts into sharper focus, it's our great pleasure to welcome Amrita Ghanekar, Senior Director of Client Insights and Innovation at BNY Treasury Services. Rita, welcome to the Payments Podcast.
Thanks so much for having me, Owen. It's a real pleasure to be speaking with you today about the new wave of payment modernization. I lead client analytics and product strategy focused on transforming how institutions use data and analytics to drive smarter decisions. And so I'm super excited to be here on this podcast today.
We're delighted that you could be, and we're going to dive straight in, starting with SaaS. Our topic today, as you said, is the next wave of payments modernization, I think you said. SaaS may not exactly feel like modernization, capital M, to some of us. It's been around for a while, but you and I spoke recently, and I found things you said about the role of SaaS in B2B payments modernization to be quite powerful. For example, please explain how SaaS models generate differentiation value and revenue for banks in the current payments landscape.
So, Owen, SaaS isn't just a delivery model, right? It's a business shift model, meaning it's making the move from infrastructure to intelligence. And what do I mean by that? SaaS is not just streamlining banking, it's fundamentally redefining how banks compete. And this goes beyond just upgrading legacy tech. This is truly an enablement to drive that agile innovation, cost efficiency, and hyper personalization. Those are kind of the three pillars of sustainable differentiation in a very rapidly commoditizing sector. So let's unpack that. First is the speed to innovation, right? Think of SaaS platforms enabling banks to roll out new features, new functionality, not in just in months. It could be in weeks, definitely not years. And this really bypasses that heavy operational lift, so to say, of traditional IT. Second, personalization at scale. Advanced SaaS analytics and AI unlock that hyper personalized banking initiatives. And this helps banks truly tap into deep behavioral analytics to tailor offers and experiences. And that we know is a serious driver of customer loyalty.
Got it.
Economies of scale. SaaS flips the script from CapEx to OpEx. I think that's huge. It freeing up capital for growth and marketing, rapid experimentation, right? That's a big thing. Everybody wants to drive their costs down. And if you think about this, SaaS also introduces kind of that always on compliance and security built in. There is some regulatory changes happening. SaaS providers are able to deliver that top tier security and regulatory updates almost automatically. And so there is that network effect that SaaS can enable. I'm going to leave you with some stats. I just read this recently that Gartner survey suggests that the global SaaS software delivery in 2025 will reach 300 billion. That's a 20% increase just year over year. That just shows you how rapidly the segment is growing.
That is impressive. Now, you mentioned your expertise in decoding data insights, Rita. In light of that, tell us the key benefits of creating data sharing ecosystems in banking. How does it enable better contextual intelligence and more?
Great question, Owen. I read this recently and this quote just stuck with me, right? The future of banking isn't about moving money. It's about understanding money movement, predicting its flow, and creating value at every transaction. I think that just sums it up, right? So when we talk about the key benefits of creating data sharing ecosystems in banking, we're really addressing one of the most transformative trends in the financial sector today. To start, data sharing ecosystems enabled by technologies like open banking and APIs, they're allowing banks and their partners to exchange customer information securely, efficiently, and of course with customers' consent. And there's some direct high value outcomes of this that a bank can see immediately. One is the enhanced customer experience. That access to more holistic data, whether it's transaction history, it's external accounts, spending patterns, you're letting banks truly innovate and offer those personalized services, products, and also advisory, by the way. That's a very important initiative that banks have as they walk through their clients' transformation journeys. Greater innovation and collaboration. Data sharing fosters that collaborative environment between traditional banks, fintechs, and third-party providers. That's what helps, lower barriers to integrating new solutions. It speeds up product development. It it does things that maybe no single player could deliver independently. So that's important. And the third one is risk management. I think that to me it's last but probably the most important is access to richer aggregated data sets empowers banks to better access creditworthiness, detect fraud, respond to changing risk profiles. So, if a suspicious activity is detected at one institution, that collaborative intelligence can quickly be shared and acted upon throughout the ecosystem. And that dramatically improves collective resilience. So think about what Swift has done, right? Swift has brought together leading global banks, BNY, Deutsche, HSBC, and others to pilot AI driven privacy preserving data sharing for cross border fraud detection. By pooling this anonymized data and using a federated learning model, banks can detect fraud patterns industry wide. So this is kind of an improvement of resiliency for everybody. About contextual intelligence, again, a topic very dear to my heart, being in analytics. Data sharing is the foundation of contextual intelligence, right? It's combining data sources through which banks can truly understand not just what a customer is doing, but the why. What's driving their financial decisions? What life events are occurring? What the future needs might be for a customer. And this enables a shift from reactive to proactive banking. That's what's key here. So it's really moving beyond that transactional relationships, but it's moving towards holistic, contextual partnerships with clients.
It's a huge shift. Hyperconnectivity is crucial to payments modernization in your view, based on what we've talked about. What role is hyperconnectivity fulfilling in payment processing and risk management for banks, Rita?
Oh, and when we talk about hyperconnectivity in payments, we're not just talking about speed. I mean, that's what comes to mind first, but it's beyond that. What we're talking about is a shift in architecture, in behavior, in accountability, right? Hyperconnectivity means that banks, corporates, payment systems, fintechs, and the wide data platforms are all plugged into each other in real time through APIs, event driven systems, and of course, let's not forget shared protocols like ISO. This sort of connectivity creates that always on, context aware network where every node can react, respond, make decisions instantly. So, what changes? For payment processing, it means you're no longer sending out a payment into the void, hoping it lands, right? You're initiating a transaction in a connected web that can validate, identify, route through the most efficient corridor, track settlement in real time, and surface issues before they become breaks or disputes. Think embedded analytics and alerts. Think about getting notified when your payment velocity drops in a particular corridor, or receiving a gentle nudge, sometimes not so gentle, when a seasonal shift is detected. And for risk management, hyperconnectivity transforms it from a very post mortem exercise, if you will, to a predictive one. You're not waiting to detect fraud or operational risk after it hits the books. You're plugged into those data flows that can flag anomalies as they form, even across institutions, because we're connected, geographies, or transaction types. But Owen, I don't want to be all Pollyanna on this topic, especially on the risk one, because from a risk perspective, hyperconnectivity does mean two things. One, there is increased risk exposure. The more systems, the more partners are linked, greater is the risk of cyber attacks, data breaches, supply chain vulnerabilities. And, this is real, particularly as open banking and APIs proliferate. And two, the emergence of connected and interdependent risks. That's real too because risks are no longer isolated. Whether it's cyber, reputational, market, operational, all of these risks bleed into each other and they can rapidly propagate across interconnected systems. So, again, that focus on resiliency, governance, privacy is of utmost importance. And so, a shift towards that more predictive, tech driven environment, analytics heavy, contextual intelligence heavy, is very key.
I can feel it all coming together, the whole network there effect. Taking a wider view, though, how do you see international payment trends influencing U.S. modernization efforts, Rita?
Well, international trends are exerting real pressure on the US to modernize.
Okay.
But I think not through regulation, right? It is through client expectations, through competitive asymmetries, through global liquidity shifts. So, first, real time is no longer optional. Globally, if you look at what's happening, over 80 countries have real time payment systems in production. With India's UPI, Brazil's PIX processing, billions of instant transactions getting settled at near zero cost. The US, by contrast, is playing catch up and nicely with FedNow and RTP, though it's an early adoption. But here's the twist. US multinationals operating in these regions are now asking why their domestic operations can't have that same speed, that same transparency, the 24 by 7 capabilities. So I think that demand is now bleeding into domestic treasury and the B2B corridors.
Uh,
Second, the rise of cross border interoperability standards like ISO. That's definitely forcing alignment, and that's a great thing. So, whether it's Swiss global push or regional schemes like SEPA, India's UP, we're seeing that convergence on very rich structured data. And so, what that means for US banks and corporates is the need to shift from just moving money to managing, again, those contextualized flows. Payments are becoming, if they haven't already, very data rich assets for every bank. Third, again, this is not about the crypto hype, so let me make that very clear. But if you think about the CBDC world, right, central bank digital currencies and tokenized deposits, they are being tested globally. It's all about programmable money infrastructure. That's happening globally. It's going to happen here. And then finally, I love this, right? Client expectations and every client, every individual, those expectations have gone global. Whether it's an e commerce seller in Vietnam or the US insurer handling claims in, I don't know, Brazil, frictionless payments are now table stakes. And what that means is embedded FX, instant disbursements, transparency, traceability, all those things that we have talked about that traditionally are hard to do within just the domestic corridors. And so, yes, international trends are not just influencing US payment modernization, they're actually accelerating it, defining those benchmarks. And so, if you think about the success, it's not really thinking about modernization as compliance, but we can start to see it as a competitive reinvention.
okay. Last question, Rita. Talk about
All
the
right.
shifts in mind. Talk about the shifts in mindset required for banks to fully leverage real-time processing and hyper personalization. And why are these capabilities so important, Rita?
Wow, Owen, do we have the next 24 hours to talk about this?
We have a few minutes, yeah.
All right, let me try. So, to fully adopt real time, and hyper personalization capabilities, right? Banks need a fundamental shift from being product centric to being truly customer centric. And this requires rethinking processes, retraining staff, sometimes overhauling business models to kind of place those customer needs and behaviors and preferences at the core of every service offering. For decades, banks have operated in like batch cycles, periodic updates, kind of the one size fits all offering. But in a world where a customer can stream a show, get a food delivery, receive a mortgage pre approval, all within minutes, sometimes concurrently, that model simply doesn't cut it. So if you ask me, the shift is required. It's happening in kind of two ways, right? First, the shift is from control to collaboration. What I mean by that is banks must move from guarding their data in silos to really orchestrating it in real time across systems, across channels, even across their partners. Hyperpersonalization demands integrated ecosystems. Real time isn't just faster plumbing, it's about enabling that contextual intelligence at the moment of need. Second, we're moving from segmentation to individuality. It's no longer about marketing to a certain segment like Gen Zs or SMEs as a group. It's about knowing that this particular customer right now is traveling. Their payroll hit early. They may need an instant FX conversion or a credit line top up. It's kind of that contextual intelligence in real time that requires machine learning, streaming data, and I think most critically a cultural shift towards trusting algorithmic decisioning at the edge. So bottom line, the mindset shift is from reactive banking to predictive partnership. Real time and personalizations aren't tech projects, they are the new identity for banks, one that's built on trust, immediacy, and relevance, all delivered not at the speed of light, but at the speed of life. That's what I think. I know that was a little poetic, but
Yes, I have no problem with a little poetry in an answer. Thanks, Rita. Will business payments modernization ever be finished? Possibly not. However, banks are certainly taking payments to new places in faster, more secure ways. Our thanks to a terrific guest, Amrita Ghanekar, Senior Director of Client Insights and Innovation at BNY Treasury Services. To our audience, the smartest people in B2B payments, thanks for listening. Hit subscribe. Catch us again on your favorite podcast platforms, including Apple, Spotify, iHeartRadio, and YouTube. Bye for now.
The Payments Podcast from Bottom Line.